Good morning, traders. It's 8:02 a.m. Chicago time on May 1st, 2023. Thanks for joining me on episode number 2459. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So we're going to jump in with both feet here into our pre-market summary sheet from Convergent Trading. A reminder that you can always grab this at twitter.com/conv trading, COMV trading. Be sure to follow so you can get it when it comes out, fresh off the press at 8:50 or so every morning. This morning, the market's really mixed. You want to ignore the FESX and the FDAX from Europe and from Germany. Because Europe is completely closed. It's May Day today. And so there's no action there. Also, it's May Day in Asia as well, so much of the major Asian indices are closed except for Japan, which has performed pretty well actually overnight. We have a lot going on this week. We did get the consumer confidence number this morning from Japan, which was pretty decent. It came out at 35.4 versus 32 forecast. We do get ISM manufacturing today. But a quick rundown of the week ahead. We have the Reserve Bank of Australia's rate decision tomorrow, expecting to hold stable. The inflation rate out of Europe. We get the JOLTS number out of the U.S., we get unemployment rate out of Europe. We get the Fed rate decision on Wednesday. On Wednesday with the press conference. And then on Thursday, we get the ECB rate decision. But also on Thursday, we get, let me see here, Thursday, I believe Apple. Yes, Apple expected at $1.43 per share on $92.87 billion in revenue. Speaking of earnings, we've kind of passed the peak a little bit, but there's just a lot still going on. Airbnb today after the close and others. We get Pfizer tomorrow, HSBC out of the UK. We get AMD tomorrow. We get Starbucks tomorrow, BP, Uber tomorrow, Ford. There's just a ton here. Wednesday, Qualcomm, Airbus, BNP Paribas, and then Deutsche Post and so on, Kraft Heinz. That's on Wednesday. Phillips 66, MetLife. These are all giants. Thurday, again, Apple, ConocoPhillips, Booking Holdings, and so on and so on and so forth. Of course, you can look all this stuff up yourself. But the point being, there's a lot going on. The major incremental news is First Republic has officially been seized by the FDIC and has been sold off to JP Morgan. JP Morgan announced that the contribution to their bottom line is around $500 million, which is a drop in a bucket for JP Morgan. But this is the second largest bank failure in U.S. history. And that chapter is kind of coming to a close. Chinese manufacturing PMI suggests weaker global demand. ARM, which is a chip designer out of the UK, is deciding to list in the US versus the UK. The listing's supposed to provide $8 to $10 billion in market cap. And then Charlie Munger saying US banks are full of bad commercial real estate loans that have not seen the light of day to date. So we might once that starts unwinding, we might see some action there. This morning, ISM manufacturing at 10, construction spending at 10, and then that's really the major stuff. Take a look at, since it's Monday, we want to bring your attention to the rotations. Take a look at the rotations, the way the volatility and the overall rotational structure, the harmonic rotations in this market have just been collapsing. We're down to 4.5 points in the ES per rotation. This is based on 1 minute peaks and troughs distributed over a profile, and we're reporting the edge of what we would consider to be a normal rotation as a frame of reference. Last May, this number was around 13 or so. In the NASDAQ, it was somewhere around 30-something, almost 40 points. So what this means is that in general, we can bring our stops in, but also our targets have to be a little bit tighter as well. Basically, as volatility gets sapped out of the market, we have to account for that. So there's that. We're looking also at the S&P being balanced. The S&P finished very strong in what was a trend day up on Friday. Well, it's a normal variation day up. Really, technically, wasn't really a trend, but we finished very strong on Friday, settling at 4188.50 in the S&P, and then since then, the overnight session is completely bounced. We managed to take out the high, which was expected. Notice the volume here is 99,000 contracts, 99,000 contracts versus about 200 to 230 or so that we've been getting, 180 to about 230,000 at this point. It's very, very light because Europe's closed. So a lot of the sympathy trades that occurs in the ES, the ARBs, all that stuff, none of that happened in the overnight session, so the volume's not there. Inventory's 40% short, and that's what's important about the S&P this morning. So, what have we done? Here's the overall picture. Really, the narrative has been very interesting in that we had this struggle at 4,100, and we've had this struggle near 4,200 around the 4190, 4195 zone. So this is 4195 peak here. So we sat in this for the entire month of April. So we gapped up, I believe the last day of March, and then we sat in this absolutely mind-numbingly sideways range of 100 points for the month. 100 points, 100 points for a month. That is incredibly tight given where we were last year and how we've been trading recently. We normally do about 50 points a week. Not that there would be end-to-end weeks. There will be some overlap, but we do about 50 points a week, and we've been at 100 points for the month, and that tells you a lot about how things have been trading. We held this 4130 for a little bit. You know, we traded in this box for a little bit, then we finally broke through, and this looked like we may actually make our way down to 4024 or so. We could not. The best we could do is 4068. Didn't even get to the 66. And then what we've done since then is we have really trended up. You see where we are opening at the low end of the range, finishing at the high, opening at the low end of the range and finishing at the high. And so when it came, when we showed up on Thursday morning, I talked to you about Wednesday and Tuesday being overlapping days in value, and this was a threat to the shorts, and this could really rip up. For those of you who were here last Thursday, you heard me say that, hey, this isn't normal for a market that has pretty good price discovery to the downside. I talked on Thursday morning about the very strong possibility that we have found buyers, and shorts are likely to get squeezed back to 41. If you recall, 41.30, 35 was the key, and this thing ended up running all the way back to 54 or so, which is the 53, 54, which is the composite point of control in this region. Um, and then on Friday, it opened at the low. It opened at the low and it finished at the high again at 41.90, basically putting in a high of 41.90, finishing at 41.8850. A lot of strength. You can see the point of control is the upper end of the range. Same in the volume profile. The point of control is just above the initial balance. And we finished the week basically running out of time and not really finding sellers. The sellers could not be activated enough to push prices back down below the point of control, around 41.80 or so. And again, this is pretty rough for short sellers. So what this has done is it's balanced. It tested below balance of 4,100, and it has gone to the other side of balance. This is basically, if this was occurring intraday, we would be looking for a neutral to neutral extreme up day, but this is happening over several days. The same concept is true, that we are likely to look for a push through the 4,200, 4,204, and this is likely to run higher. And this week it's got its catalysts. We've got the FOMC, we've got the ECB, we've got the RBA today, we've got Apple, we've got a ton of earnings still ahead. So there are many inputs that this week is expected to be a pretty busy week. So this is not a week you want to kind of slack off or not focus. I expect that there's likely to be some pretty decent trading this week. Same in the NASDAQ, except when we talked last week, I told you this was unusual. The ES managed to go down and finish right there, put in a P-shaped profile, and then the next day it opened above. And what the NASDAQ did, it had an inside day and was opening above. And I'd warned anybody that's short in the NASDAQ that this is a pretty bad situation to be in. Probabilities are very much against the short, and then the NASDAQ goes and cleans up all of the structures, weak structure above, takes out the single prints, and then manages to then challenge the most recent high, right? The high of the year so far, 13,327 or whatever it is, closing near high. So again, the NASDAQ expected to take out its Friday high and continue to trade, continue to hold on to these prices. And what it did is it extended Friday's high to 13,370 and is holding steady around the prior settle. Pretty interesting situation there in the NASDAQ. Crude managed to fall through our key 77, retested the 77 on Friday very beautifully here. Crude, we talked about how we were pulling back. We closed the gap zone, but crude looked like it was basing. Now that it finished very weak, it managed to take out that weak low, and then it popped higher, and then today it is sitting in balance. So crude is still in digestive mode. It has retested the 77 and held the 77 from below. So again, crude, let's zoom in a little bit. 77 was the key. We went to 76.97, right, last week. And then we fall through, and then we pull back, and we go to where? 76.92. We missed 97 by 5 ticks, and then we end up opening weak today. This does not bode well for crude longs into the close on Friday, even though it had a double TPO high, basically had a weak high, but it pushed and tested the key 77 level, which is the point of control in this area from below, and is failing. This is very likely to continue lower in crude unless Saudi Arabia or Putin or somebody does something. Russell stuck in the middle with you. That's the condition of the Russell here. The Russell has pulled back, and it's kind of, while the S&P and the NASDAQ are way up here, The Russell's still stuck right in the middle, and it's likely to continue to chop around. Now that the First Republic thing is out of the way, I'd expect the Russell to see some money coming in, a little more confidence in the banks that are the regional banks that are in the Russell, but overall the Russell is just weak. Here's the S&P on a day session only and running for the week. So let's extend this out to see what it has done in this region, not including Friday. And what it's done is it's tested below bounds, and it has pushed to the other side. The S&P is just set up to has set up pretty well to continue to crush shorts, in my opinion. Same with the Nasdaq. It has, tested below the balance. Let's bring this forward right here. Tested below the balance. It essentially what it's done is it's, think of a surface of water, and you want to know if it's safe to glide on it. And what you do is you stick your hand in, waddle it around a little bit, and see if there are any takers, any dangers. And as soon as you don't have any dangers, no sharks or whatever, kind of a silly analogy, you can now confidently go out and ski, right? This is kind of what happened here. We probed below bounds to see, are there more sellers interested in pushing this thing down? And it looked like they were, right? Because we closed pretty weak, and then the next day was an inside day, and then as soon as the market falls back into the range, the buyers can with a lot of confidence see that there's failure below, and they can more confidently push prices up. I mean, this concept comes way back from like Jesse Livermore in Reminiscences of a Stock Operator. If you have not read that book, it's pretty interesting. But this is the same concept. We're going to check for sellers below. Oh, found buyers. Boom. Now all the buyers step in because they don't want to miss the trade. Can't say that for crude, though. Crude really very, very likely to continue lower. I'm expecting to see crude down in the 72, 71.50 zone, 71.80 zone, way down here. Crude is not likely to hold this balance here. Technically, it's a fundamental product, so you got to keep that in mind. But I'm expecting crude way down here at some point. So I'm expecting it to clear all of this and start working its way down below there. In terms of what's the plan for today, so let's take a look at what's happened here today. In the overnight session, we've basically cleared the week high from Friday, the 71.90, and we've tested the 96, which we've done before. And so now we end up with on a multi-day chart. What we end up with is 71.94.50 as the prior high, and 71.96. That's the RTH high. 71.96 in the overnight session. I believe the full session high was 71.98 or something like that. Today's 71.96. So what that looks like on a chart is we've pushed up and then we've pulled back. We've pushed up, down again, and we've come back again. And what this makes it is a double top on a multi-day time span. And so this is a higher probability of a break higher. But is that going to be today? Don't know. Currently, the S&P is sitting at just underneath the overnight point of control, which is right here. The overnight point of control, the mid, the full session VWAP are all kind of pancaked on top of each other, and this market is very, very much balanced. So because there's a holiday and because the trade is so light, it's hard to know what it's likely to do. But in how I'm seeing this is it's very likely to push lower, tag the overnight low, try to squeeze down below that 4178-ish area, and then eventually start to push towards 4,200. I'm not expecting too much today in terms of the action. It's been very light, but that's the main scenario. The secondary scenario is open auction. It holds steady, and then starts to squeeze without ever pulling back. This would be a much stronger push in this situation. We're looking for 42.10 and then 42.22 up here, way up here. Those are the two key scenarios. The third scenario is an open test higher, drive lower. And this could change the landscape a little bit. And the target for this would be, should be the magnet down here. Is that the magnet? I don't see. Should be the magnet down here in the 53 area. So I'd expect it to push into 53. If we test up and we find sellers, which is not the likely scenario, this is the third or tertiary scenario. If it's not able to find buyers to hold it up, then the target becomes 53. Why 53? It's the MC point of control in this area, and it's the key magnet in this area. So the first scenario, pull back, drift down, take out the overnight low, and then squeeze higher into the 4,200. The second scenario is it holds steady where it is, showing strength, and then if it starts to break higher through the overnight high, then it's probably going to go farther if it gets into the 4,200. There's going to be a lot of stops up there, and if it fails to hold this range and starts pushing lower, then the target becomes 53 from where we are right now, 41.82, very attainable, okay? That's what I have for you. Good luck. Don't forget to hit the like button. Don't forget to subscribe to the channel. It's free, and you will get notified every time there's something posted. Good luck today. Mind your risk. It is very, very light volume, very light trading this morning. We're missing our European friends who also provide liquidity and stuff, and so just be careful. Don't get sucked into defending trades, okay? Take care.